The best of Money Matters.
Market View on Money FM 89.3.
Hi, I'm Willie Keng. You're listening to Money FM 89.3, and it's now time for Market View, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and companies to watch. Last week, US stocks lost close to $7 trillion in just 2 days. Earlier this week, Trump paused tariffs, sending the S&P 500 soaring 10%, the largest one-day percentage jump since October 2008. So far, Trump's back-and-forth tariffs have sent markets in a panic. In less than 24 hours after the US president backtracked on his once-in-a-century trade war, sell-offs hit US assets including stocks, bonds, and the US dollar. The S&P 500 index ended yesterday lower on 3.5%. In Singapore, shares fell after the market opened on Friday. Most STI constituents suffered losses, with Singapore banks down at the open. DBS shed 3.7%, OCBC fell 3.2%, and UOB dipped 2.8%. Now, how do we make use of these situations? Let's unpack all of this with Benjamin Goh, Head of Research and Investor Education at SIAS. Welcome to the show, Benjamin.
Hi, Willie.
Hello. Well, last night, the S&P 500 ended the day down 3.5%. We have long-term treasury yields sank, sending yields soaring, and the dollar tumbled for a third day as traders are sold off US assets, looking for safer havens like the Swiss franc. I mean, Ben, what's your views here on investors divesting away from US assets? Do you think this is justified?
Well, I mean, certainly the sell-off is not just about U.S. assets, but is about the majority of risky assets globally. So if you look at prices of, stock prices in Asia, Europe, they're all down as well. And you have pointed out that U.S. Treasuries had a mini sell-off as well. That's simply because of a Trump-specific issue. The reason is that because of the volatility and the uncertainty in what's happening with tariff war, people are kind of like getting a bit anxious about holding U.S. Treasuries. So they are pivoting towards safer government bonds such as the German bond as well as the JGBs, Japanese government bonds. So that's, kind of new. That has never happened in previous financial crisis before.
Right.
And is very specifically a reflection on the current policies by the Trump administration. Now, the other thing is, of course, as you may have already noted, that the March inflation numbers showed a slight improvement, I believe 0.1%. But that's where, that's another reason why investors may be divesting U.S. assets, simply because the tariff impact on inflation is really not showing up in the data yet. So there is the other shoe that has yet to drop. Of course, that's going to be placing the U.S. Fed in a really impossible position of fighting both inflation as well as recession. So I think right now is generally a risk-off environment. So investors are selling U.S. assets, basically hold cash or to invest in a slightly safer asset elsewhere.
Well, speaking of risk-off environment, in U.S. corporate news, we have Tesla shares down 33% year-to-date. It has recorded a 7% down from last night. So far, it's by far the biggest decline, amongst the U.S. tech mega-cap companies. What's your view here? What's driving its share price performance lately?
Well, I think Tesla has got two big problems. So one is business-related. So China is the world's largest automobile market. And, of course, the Chinese automobile market right now is dominated by EVs, so electric vehicles. So if you take a look at the EV market in China, it is hyper-competitive. BYD is now the clear market leader. They have really good technology, especially battery technology. So some scientists have actually written papers on this. So the BYD battery can charge in under 6 minutes and is arguably safer than the competing battery from Tesla. Now, if you look at the BYD, and there are lots of BYD cars in Singapore nowadays, they look good. They're sexy. And of course, if you look at anecdotal reports, don't talk about Singapore because we've got COE, right? But if you go back to China, right, for every one Tesla in China, you can buy 2 BYDs. So it's an extremely challenging business environment for Tesla in the world's largest auto market. So that's one problem, right? The second problem is, of course, Elon Musk. So you have his personal behavior and politics that really puts off the majority of his, traditional customers. So Europeans don't like Elon because of his support for the far right in Germany. Americans who tend to lean left, like Democrats, don't like him because of what he's doing in the Trump administration. Americans who lean right, like Republicans, they like him, but really they prefer gas-guzzling trucks rather than EVs. So he is product is in an inevitable position. The brand Tesla as a whole, as well as his own personal brand, has been, I guess, irrevocably damaged. You mentioned that Tesla shares are down 30% year to date, but if you compare that versus Tesla's peak, which was late 2024, it's down 47%. And I'm not really sure whether we've reached the bottom yet, because all these, or rather the two main problems that I've just discussed, they are not going to be solved tomorrow. I mean, arguably they're going to be here for a long time, because the Trump administration is now only in its third month. There's another almost 4 years ago. So I'm not really sure what's going to happen to Tesla.
Yeah, I mean, you have mentioned about the intense competition coming from the Chinese EV makers. You also talk about Elon Musk political challenges coming from Europe and even the US as well. So what do you think investors need to see here for Tesla if ever there could be a potential rebound going forward?
Well, I think for the first, the first point is that he needs to come up with better products. So if you look at the new revamped Model Y, it's not too shabby actually, and I think it's been recently introduced in Singapore as well. So you can always go down to the showroom and take a look. But the other thing is, of course, a Tesla is not for everybody, right? So if you see the interior of Tesla, it's like the surface of the moon. It's Spartan. There aren't any like knobs and things that you can play with. So people either love it or they hate it. If you look at BYD, it's more traditional, more intuitive, and the whole thing about the safer battery is really a big plus for me personally. And because you've got some sporadic reports where EV batteries catch fire and all that, so that's really a seller for me. And of course the price, you can't beat the price, right? So outside of the COE regime in Singapore, if you look at BYD, it's highly competitive compared to a Tesla. So he needs to come out with a better product at a relatively cheaper price to compete in the world's largest auto market. Now, that aside, Chinese in China actually like Elon Musk for some reason. I mean, it's all over social media, right? I think it could be also because Elon Musk helped to revolutionize the EV market. He was the one that sparked all the interest and all that. So he's like the kind of like the godfather, right? The fufu, right? So that could be his personal brand. But globally speaking, it's his personal brand is kind of damaged now. So he needs to kind of fix that. As for his politics, I think again based on media report, he seems to be kind of distancing himself from what he's doing. Maybe he wants to focus more on his other businesses. He's got SpaceX, you got Tesla, then you've got the X, which used to be called Twitter, joining, merging with his other AI startup. Yep. So he's got lots of things to do, and if he focuses his attention more on his business end of things, that could actually help his portfolio companies, including Tesla.
Yeah, I mean, speaking of distancing, with Tesla share sell-off, we also have the US assets selling off here. How do you think the STI has been impacted, and how has it fared so far, and what's driving markets here?
Well, I mean, the Singapore market is similar to all the markets, basically is mirroring the US. So if you look at today's performance, STI is down. Mostly is rate for the 30 component stocks of the STI. As you already pointed out, the financials were barely hit. Again, we know why, because financials generally are pro-cyclical. A few commercial and logistics REITs were up. One bright spot was, of course, Yangtze Shipbuilding, up 2.6%. But that's really driven by the company buying back 2 million shares in the open market today. But apart from that, it is a risk-off environment for Singapore, Asia, Europe, all in line with what's happening in the US. So we can't get away from this simply because our markets are very open. We don't really have got a lot of regulations keeping companies out. We're a very export-driven economy. So whatever happens overseas is going to show up right here on the STI.
Now, I just want to move quickly into the region in China. We have seen now China's biggest EV battery maker, contemporary Amperex Technology, is looking to raise at least $5 billion. And this would be potentially Hong Kong's biggest offering this year. I just want to get your views here on the latest listing. And, would US-China trade war impact on the IPO?
Well, if you're talking specifically about the Hong Kong IPO market, if you look at the first 3 months until March, right, super strong performance, so lots of big valuations, companies doing an IPO. Again, very much in line with the priority of mainland China's regulator. So their stated objective is to create a healthier long-term capital market by encouraging IPOs by high-tech, innovative companies, right? So it's been very strong first quarter for Hong Kong IPO market. And again, before Liberation Day, before the current tariff war, the forecast or the outlook was that is going to continue being strong. So the Hong Kong IPO market was expected to have a very strong 2025. Now the problem is, of course, the current tariff war, and Liberation Day was last week. The Hong Kong market, as well as all other markets, you look at the Hang Seng Index, it has fallen by 15% since 1 month ago. So yes, companies want to list, but now that the overall market is down, they may want to reconsider the listing at this point in time, because why would a company want to do an IPO now and sell at a discount, right? So most of the time, companies will want to list when the market is very bullish, when the market is very strong, when there's a bull market. That's where they are able to get close to the highest price for the IPO. So the next 3 quarters for the full year 2025 is going to be quite interesting because regardless of what's happening, companies that have got cash flow, have got relatively strong businesses, they may want to wait out the IPO until things settle down. So again, it's more than 100% tariffs for both China as well as the US implementing on each other. Hopefully there's a deal to be done. So some of the companies might be waiting for that to happen before considering going public.
Yeah, I mean, it's very interesting you point out earlier, Ben, about Hong Kong's IPO earlier this year. It has grew about 25%. I'm just curious, from Hong Kong's IPO, and if you look into the Singapore market, Singapore has grown its Singapore depository receipts with Ping An, Xiaomi, and Meituan. So going forward, do you think this potentially increase in IPO volume in Hong Kong would have a trickle-down effect in our local stock market here, in the case of our Singapore depository receipts?
Well, yes and no. So yes, because if there are better offerings, more inverted commerce products to buy, then of course having an equivalent SDR in Singapore will allow Singapore investors to have a wider range of companies to invest in. So that's yes. No, because on the flip side, the Hong Kong market is in the same time zone as the Singapore market. So unless you have an investor which is very concerned about the regulatory oversight in Hong Kong vis-a-vis Singapore, or very concerned about Hong Kong currency, fluctuations versus the Sing dollar, or the fact that, you might want to use your CPF investment scheme to buy some of these securities, then it is not the base case scenario that a Singapore investor would want to invest in the SDR, because you can buy it from Hong Kong market. So, it's like you can buy an iPhone from Shopee and Shopee, both are the same products, right? So why don't you just buy it from, Apple Store? Why get it from a reseller? That's kind of the idea here. Now, that said, of course, SDRs in Singapore have got a bright future, because not only do they have SDRs on Hong Kong stocks, they also have the SDR on US stocks. Now, that's a different value proposition, right? So the Singapore Exchange had listed, not SDR, but DLCs, daily leverage certificates for the Magnificent Seven stocks in the US. So these DLCs are listed on SGX. So obviously, because of the slight difference, or rather the day and night difference in the time zone, it is possible for Singapore investors to make, or to have positions in the Singapore time zone before the US market opens. Now, that could be an advantage, right? So SDRs and DLCs, definitely great products, but the competitive advantage of having a SDR on a Hong Kong stock may be limited by the fact that both of us, Hong Kong and Singapore, are in the same time zone.
We have been speaking with Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for your insights, Benjamin.
All right, cool. Have a great weekend.
Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.